Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Monday, January 5th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the first full trading week of 2026 has begun with both trading volume and market participants. They have returned. Looking at the precious metals, the broader picture on the markets, the dollar, oil, and gold are the prime focus of the market reaction to the dramatic weekend of events in Venezuela. Stock futures are headed higher with renewed momentum in the AI trade. The first full week of the new year also brings a busy lineup for macro data, headlined by the December non-farm payroll data on Friday and factory PMI data later this morning. S&P 500 futures up about 0.3% here at 69.21. You do have the NASDAQ about 0.7% at 25,567. You have the Russell just slightly higher at 25.24. Looking across at the precious metals markets, you got gold up $105 at 44.35, running into some resistance at 44.51. Looking at the silver market, running into some resistance overnight, the $76 handle, and trading at 74.93 here last. You do have copper futures up 17 cents at 586. So looking at the same time here, the near-term impact here on some of these markets. So you got silver rallying back over that $75, gold on the rise, and then you got oil fluctuating with foreign claims on the Venezuelan oil. So at the same time, the near-term impact on oil supplies is likely to be limited here, and OPEC Plus reaffirmed its pause on production increases through the end of March. You see in gold futures surging after holding that trendline resistance, and we'll put that chart in the metal's edge. You look at silver, the bull case here remains intact here with all 7 points that I check on a daily and weekly basis here. You got sustained investment demand, you got tighter market balances, you got strong ETF flows, you got a downward sloping forward futures curve, you got heightened physical shortages in the European markets, you got concerns over Chinese export restrictions, which could intensify a tight global market already, and the global production deficit is most likely going to continue in 2026. So looking at some sectors in focus, obviously we're going to be looking at energy, defense, and precious metal miners here in focus, and you have Chevron surging about 8.4% in the pre-market. We'll have that December ISM manufacturing data coming out later today. And if you look at the rate cut expectations, it's still kind of a wait and see. Now on Friday, we will get the unemployment rate. In September, it was 4.4%. In November, it jumped to 4.6. I believe that if we see a jump up to about 4.7, the expectations for a rate cut in January will surge here. This will potentially lead to a significant drop in the value of the dollar, which could impact treasury yields, the gold market, all the foreign currencies, and obviously the stock indices. So we'll want to watch that CME Fed watch tool at that January 28th meeting, where there's only a 18% likelihood that the Fed will reduce rates by about 25 basis points to a range of 3.25% to 3.5%. You go out to March, it is starting to increase to 44%. You look at the FX, the risk, and the rundown here. You got March dollar 98.36, so that's pushing up about 0.2%. You do have some pressure on the euro currency, which is starting to look actionable near some support levels here with a potential move back up to about the 120 level. You got 10-year treasury yield sitting at 4.17%, not quite extended all the way up to that 4.2% where we start to look at those 10-year futures. You got VIX futures sitting at 1609. You got Bitcoin, we flagged this one last week, capturing the 90,000 level, extending gains on up to 93,400. And you got the S&P Gamma exposure. Well, it remains skewed slightly negative here, which could mean some higher volatility coming in, but we'll have to wait and see what a catalyst would be for that, because you do have European stocks advancing, and you got Asian equities rising to record highs here, supported by gains in tech-heavy markets such as Taiwan and Japan, with the MSCI Asia Pacific Index jumping for the third straight session here and rising as much as 1.7%. You'll get those ETF flows. So it is the start of a new year. So a lot of the numbers here that we track, like year-to-date percentage changes, well, they're going to be at zero because we're just starting the year here. So you do have ETFs. They did sell some gold, silver, and platinum on the previous session on Friday. They did buy palladium here. The exchange-traded funds, they cut about 107,000 troy ounces of gold. That was the biggest one-day decrease since November 20th. You look at the silver flows, they cut about 142,000 troy ounces of silver in that previous trading session. And then what we'll do is we always look at the previous week here. So they did reduce some gold, they did reduce silver, they increased platinum, and they increased palladium. You got the gold-silver ratio sitting at about 59-1. So, you know, this is the first full week that we're coming back, and you could see that the market reaction with a lot of green across the screen. A lot of people were out since, the holidays began right around Christmas and throughout last week as well. So we should see an expectation of a surge in volume here this week. And a lot of times this first full week really kind of dictates what's going to happen here throughout the year. So nice to see a bunch of green on the screen here. And if you got any questions, you'd like to open up a futures trading account, shoot us a call, give us an email, send an email to info@bluelionfutures.com. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.